And let's turn to our next guest, who says whoever leads the Fed next inherits a numb economy. His words. What does he mean by that? Let's bring in David Harden. He's CEO and Chief Investment Officer at Summit Global Investments. A numb economy. What does that mean?
Well, that's a great question, Kelly. Thanks for having me. You know, I think if you look at this last year, we've had a number of shocks, from the federal debt to shutdowns in the government, strikes, geopolitical risks, and they're going to continue in 2026, but we're kind of numb to it. No one's really doing anything. The consumer is still spending.
So it's a good thing.
Unemployment's still low, and that's a good thing. And so I think overall, no matter what he chooses for this Fed, the reality is I think the market marches on.
In other words, we can't be too shocked by whatever's coming. The economy is kind of in a good spot. The consumer is going to get a tailwind next year. And, you know, this politicking at the top of the Fed, I mean, probably the bigger risk, honestly, that a lot of people are worried about is maybe slightly looser on the margin, and the economy doesn't need policy that's that much looser. That's probably the bigger risk for the markets.
Right. And it gets kind of like old news in the sense of we hear it so much, we just are tired of it. So we just move to other things. Yeah. And so we look for other things to keep our attention.
That being the case, David, how are you setting up for next year? Talk about being numb. You know, is it AI? Is it not the AI trade? What do you think about the metals? I mean, there's a lot of topics that are becoming, you know, sort of, we talk about them almost constantly, but you have to still decide which of these are going to be the best stewards of capital for the next 12 months.
Well, and if you look at it, it might be a bifurcated year. So let's just take it in a chunk of for the first 6 months of the year. And the reality is that earnings per share revisions for AI type of CapEx spending and these type of companies in tech, large cap specifically, has been off the charts better than anywhere else. And I think that continues. And so even though there is some negative sayings out there, and it's people worried about valuations, we just talked about 65%, you know, that's the company releasing how much NVIDIA is going to be up. So in reality, I think that this continues. And yeah, there's going to be a little bit of volatility, but I think you want to be in some of these Mag 7s. I think you want to be in this AI trade still. Yeah,
and we should differentiate a little bit between one and the other, because the AI trade has a basket of outperformers, whereas the Mag 7 has been, you know, there's some outperformers, there's some kind of in ho-hum, there's some laggards this year. So you like Microsoft, you like Google, you would sell or avoid Tesla. Talk about that.
You bet. Well, you know, there's a lot to like about Microsoft, one of my preferred Mag 7s. And you're right, it plays in both the AI a little bit and as well as the Mag 7. It's high quality earnings, and with that AI tilt, I like that. Google has their own things. We know they're exceeding on return on equity, high profit margins, etc. But Tesla is my least favorite. And I think you're paying for a lot of volatility. They've had some negative earnings per share. I don't think the real AI is going to be taken advantage of here for Tesla. So the other thing is that I love Elon Musk in the sense that he's going to let us know. I've always said this. He's going to let us know when we need to get long Tesla again. And right now, he's not doing that. So if he's not doing that, I'm not doing that.
Wait, to elaborate on that first, because I love talking and debating Tesla. Obviously, people have very strong opinions about it. But you have to respect the stock being back at all-time highs, even after he exited the White House, with all the ups and downs they've had. And with, it's obvious we're now getting out of the mushy middle of driverless cars to them really going mainstream. And that must benefit Tesla substantially in the years ahead. So why are you a little bit more cautious about it? And what are you waiting to hear from Musk himself?
So that's a great question. First, Tesla's up today. It's doing well, and you're right. It's hitting some all-time highs. I think that it's in the right space. But if you look at capital and spending capital right now, I'd rather be in some other AI-type tech companies if I'm in that space, or some Mag 7 if I'm in that space. And what I'm looking for Musk to say is that he's back involved and that this is the future. He's always been very, very good at telling us his vision and how he's going to be better than others in the same space. He hasn't said that for a while. I'm waiting for him to say that.
That's interesting, because I always feel that he's out there every day with a message on X about this or that. But you know, to be fair, I can't think of an explicit comment he's made recently other than that. I wouldn't say he's projecting a message of low confidence in the company, would you?
Oh, absolutely not. No. He wouldn't put in that package for him if there was low confidence. So
right,
I do
exactly.
agree that I don't think he understands the definition of no confidence. He only has confidence. But the reality is that you have to put money to work. And I think there's some other bets right now that are less volatile, that probably manage your risk a lot better, and yet you still have exposure to tech and to growth.